Of you, Julia, let's kick it off with you. Seven West Media, how is the stock likely to trade today?
Well, no doubt we are going to see Seven West Media coming under pressure today from that downgrade that we saw late on Tuesday. And the company did cite weaker ad markets, but it is the higher costs that we are seeing flowing through from television, which probably has a bigger part in this downgrade that we've seen. If we have a look at those higher TV costs, they're expected to rise by about 3.2 to 3.7%, which translates to about $29 million in more costs. It does come also at a time when we are seeing weaker print revenues and increasing print operating expenses as well. So the full year guidance, if we have a look at this announcement, has been downgraded to $460 to $470 million. And to see how that stacks up against market expectations, the consensus from the market was at $511 million. So no doubt that the stock is going to come under pressure today. But if we have a look at the composition of Seven West Media, and its earnings, traditionally about 60% of its EBIT comes through from that free-to-air television area, and then around about 28% comes through from the old Western Australian news assets, or primarily the Western Australian newspaper. But altogether, this result pretty disappointing coming through from Seven West Media, given that we have seen the stock coming under pressure. The weaker ad markets, something that the market's probably already factored in and knows about, but the higher costs flowing through from television also having a very big part in that profit downgrade that we've seen, or the forecast downgrade that we've seen come through on Tuesday after month.
Up front this morning, we've had Oz Minerals out with its production numbers. What do you make of the result?
We have seen first quarter numbers coming out from Oz Minerals, and the first quarter is one that has been impacted by heavy rains, and yet despite this we have seen production increase. So in terms of copper production, we've seen that just over 27,000 tonnes, and in terms of gold we've seen it just under 39,000 ounces of gold. So that puts it on track for its full year targets. And if we have a look at those full year targets, aiming for copper production for the full year of about 100 to 110,000 tonnes, and then gold production of about 130 to 150,000 ounces. We have a look at why investors jump into Oz Minerals stock. It is the leverage to copper and gold prices, and while Australia has been on holidays for Anzac Day, we have seen a good performance by copper as well as gold. And if we have a look at this stock, there's probably going to be some sort of exploration upside flowing through for the stock in 2012. We did see that exploration program for Carrapateena really kicking off at the end of 2011, so we could see some positive flow through from that. But of course, this is a company which also has a lot of cash on its hands. In terms of just at the end of last financial year, it had about $886 million worth of cash and $200 million worth of undrawn debt. So the market obviously watching for potential bolt-on acquisitions here, but altogether that positive performance coming through from copper and gold over the last couple of sessions should be good news for Oz Minerals.
Positive territory as it stands. The SPI futures were pointing to that earlier. We've had a lot of sentiment from offshore overnight. Do you think that we'll be able to see those gains last, I suppose, for the whole day?
The key is going to be to see whether we can stay above that 4,377 point level. We have a look at the last 30 days on the Australian market. That's been the peak for the Aussie market in the last 30 days, two times at exactly that 4,377 point level. And the good news is we've already surpassed it on the open. The key is whether we're going to be able to hold on to those gains. Here in Australia, though, we also see single stock expiry, so that may have an impact in terms of volumes as well, hopefully a positive impact. But altogether, it does look like it's going to be a good day on the markets led by the material space. We saw a strong performance by the US over the last couple of days, and that was helped by the outperformance of Apple on the back of its earnings, and of course the FOMC comments as well that they're prepared to ease if necessary in the US. Tonight's also going to be big in the US. Earnings season continues for the last quarter, and if we have a look, we've got ExxonMobil, UPS, Starbucks all reporting their results. But I guess the market also moving in line with the European yields. And if we have a look at Spanish and French yields, they eased overnight in terms of the 10-year yields. And there's a lot happening globally as well. We're seeing Caterpillar coming out with its first quarter results as well while we've been on holidays. And the good news is that we saw earnings up by 29%, and that's on the back of mining services and the demand coming through from the mining area. So altogether, it does look like it's going to be the miners which are the star performers, and that bodes well for the Aussie market today.